Scott, people say that it's difficult to raise private equity dollars these days. Is that the case? And why do you think has been difficult? If it has been difficult, or it's not difficult, why do you think people think that it's difficult?
Well, I think people believe it's difficult because we're in a particular moment in the cycle. And let's separate. There's private equity, sometimes as a term is used broadly. So infrastructure, private credit, and real estate, not really feeling the impacts of what we're seeing in the PE cycle today. I think what's been happening over the course of the last 30 years, you've had a bit of cyclicality to fundraising. And so lessons have been learned in different points in the cycle. And so what's happening right now is you probably had parts of the industry that probably over-deployed in years like 2021 and maybe under-deployed in years like 2020. And so there's a bit of a dynamic right now where perhaps some assets were purchased for valuations a bit too high, and it's going to take a little bit longer to work out of that. So what you're reading about is monetizations are taking longer to come back to investors, which is impacting how some of them are deploying capital because they need that capital to come back. But I think you're seeing more dispersion right now. We had 10 years where everybody looked reasonably bright because rates were low, inflation was low, and multiples were expanding. Now we're going to see who's good at investing through a cycle.
All right.